Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. What I'd like to do with you today is give a brief update on what we're seeing within the crop markets. Here we sit in the middle of August, and USDA has provided an update not only from their crop production report, but for the World Ag Supply and Estimates Demand Report. And so that gives us a really good indication of how things are shaping up as we begin to think about harvest for the 2023 season. Now, in this case, USDA's update for August, what it did was it combined some of the information they're getting on like a weekly basis, for example, like the export numbers that we're getting or the ethanol grind that we get, and it combined that with some farmer surveys looking at what potential yields will be as we get into the harvest this fall. Now, when looking at the crops, the idea is what they found was sort of this, is that we saw them shrink supplies, but also shrink usage as we move forward. But in the case for both corn and soybeans, the supplies went down a little faster than the usage. And so that's going to help tighten things up just a bit for both commodities. As we're looking here at the corn table, they made some adjustments not only to the 2023 column, but also for the 2022 column. So we're right in the last month for the 2022 marketing year. That ends at the end here of August. But as USDA looked at the data for that old crop corn, what they found was that we actually had a little more corn on hand because they said we imported about 10 million more bushels. So you can see that that number has gone up to 35 million as we look there. So it means a slight adjustment as we're looking at, little bit larger supply than we thought we once had. But they also saw that we were not using the crop as quickly as they had hoped. In fact, they ended up making two big adjustments here as we're looking at the demand side of the equation for 2022. They ended up pulling 20 million bushels out of the food, seed, and other category. And for the most part, that's utilized mainly for corn sweetener production. So they're saying that we did see a little less corn moving into corn sweeteners. They knocked that down a bit. But the big adjustment for me was on the export side. They ended up pulling that back another 25 million bushels. And as you can look now, we're sitting at 1.625 billion bushels for export for 2022, which is down roughly, a little over 800 million bushels from what we saw in 2021 and down over a billion bushels from what we saw in 2020. So we have seen a significant downgrade in exports, and that has been a challenge this year. Now, despite that, when you add, the adjustments together here, they ended up raising ending stocks a little bit, but keeping the price there at $6.60 a bushel. So things remain very strong as we look at finishing out the 2022 crop year. But as we look forward into 2023, here's where USDA is looking at the growing crop. Based upon the farmer surveys, they found that we needed to move yield down a little bit again. They dropped it down to 175.1. And so we're looking at about a 2.4 bushel decrease as we're looking out there for the upcoming crop. That takes out about 209 million bushels from production, but we're still looking at production being well over 15 billion bushels. So plenty of supply to work with. The challenge, though, is they were reducing that production. They were also reducing that usage, and that these usage cuts were across the board. They ended up taking 25 million out of feed and residual, likely because smaller crops mean smaller residual usage. They also ended up taking that 20 million bushels that they took out of sweetener for 2022. They continued that cut in 2023, taking out an additional 20 million bushels there. And then again, in exports, they ended up knocking that one down 50 million bushels as we look here. So looking year over year, they're still expecting exports to rebound, but just not nearly enough to, get back to where we were back in 2021. So when we add this all together, the ending stocks for the 2023 crop did go down by about 60 million bushels. So got a little tighter, but you're still talking about 2.2 billion bushels left in ending stocks at the end of the 2023 marketing year, which is well above what we've seen for the past several years. With that, though, prices are going down, but compared to where USDA was at last month, they actually did raise their season average price estimate by 10 cents up to $4.90. So Still well below the last couple of years, but at least it's a little better price as we're looking at the board. Now, moving to the soybean side, very similar tale there, where they saw greater imports coming in here for the 2022 crop year. They added 5 million bushels to our soybean imports as you're looking there. And those 5 million bushels just added to the ending stock. So ending stocks went up to 260 million bushels, but this is still a very tight market as we look out there. And USDA held firm with their 2022 season average price of $14.20. Looking at 2023, again, based off those farmer surveys, they lowered the soybean yield as well. Here they dropped at 1.1 bushels per acre to 50.9 bushels across the nation. That ended up taking about 95 million bushels out of production. So again, supplies getting a little smaller, but we're still talking about a good sized crop. And when we look at down at that usage side again, here's where they took another cut out of exports. They ended up taking 25 million bushels out of that, combined with some additional imports coming in actually as well. And so when it's all said and done, what we ended up doing was added a little bit of ending stocks to 2022, but then taking it back out again in 2023. Those ending stocks for 2023 are now estimated at 245 million bushels. So year over year, the market continues to get a little tighter. And that led to USD raising their season average price estimate out there by 30 cents, moved it up to $12.70. So again, we're now about $1.50 below what we're finishing out 2022 with, but it is strengthening compared to where we thought we might be. Now, in terms of those yield estimates out there, what we are seeing is that the drought is having an impact still. It's just that, if you want to think of it, that impact has moved a bit again. And so, as we're looking at what states are suffering most right now, it's looking like it's Minnesota and Missouri that have struggled the most on the corn side, with it sort of wrapping around through Illinois and into Wisconsin and even catching up into North Dakota. But as you look at the central and southern plains, we're seeing stronger corn crops there. We're seeing some strength out to the eastern corn belt, where Indiana still has the possibility of a record yield. Overall, nationwide, though, USDA says an average of 175.1, which is better than what we saw in 2022. When we're looking at the soybean market, again, they're projecting something better than 2022. We see the central and southern plains, again, very strong yield growth there, a recovery from the drought, but that drought impact moving slightly east. And so, again, that same area from North Dakota down to Missouri and over into Wisconsin is where we're seeing some of the yield hits due to drier conditions. Looking through the southeast and all the way actually into the northeast, we always see better soybean yields shaping up here. And especially with soybeans, we'll be watching to see, do we continue to see better moisture, more precipitation moving through the upper Midwest over the next couple of weeks? That would be very beneficial to the soybean crop. Now, in terms of those export demands, that's, like I say, the biggest hurdle I think we're facing on the usage side, and that's an issue we've been dealing with for the past year. The idea is we have seen where U.S. export sales have fell well below not only last year's pace, but our normal average pace. In fact, as you look at this graph, the idea is this is looking at advanced sales for exports on the growing crop. The red line shows you what we've been able to sell thus far. The black line is the 5-year average, and the green and blue lines are the last couple of years. And you can see that our soybean sales have been below average over this entire growing season. Now, we have seen some uptick over the last couple of weeks as China has entered into the market, but we still haven't caught back up to average. And in fact, as USDA is looking forward, they're saying we're going to struggle a bit with that because we are seeing more competition, not only directly through soybeans, as we're looking at world soybean production at record levels for 2023, but we're also seeing competition from other oil seeds, especially as we see an increase in palm oil and looking at some more sunflower production hitting the marketplace here for 2023 and 2024. Now, when you're looking at that sales comparison year over year, what we have seen is some shifting here. And in this case, I'm going to say that the Chinese shrinkage you're seeing here on the new crop pie versus the old crop is something that you've got to take into account what's happening with the that unknown destinations on the new crop side. Many of those unknown destination sales will end up being into China, something that we typically see over the course of the year. But where I'm really watching are places like the European Union. We saw some very strong sales in there over the past year. Those seem to be drying up, especially as those other oil seed supplies are entering the marketplace. One place where we've seen some growth is actually Mexico, where we are seeing a little bit better pace of sales thus far on the soybean side. Corn suffering a similar situation where we're well below average in the last couple of years, but we haven't had that big upkick like soybeans have gotten, at least over the last couple of weeks. So the corn market does continue to struggle. I think this does bring up some concerns that we could see USDA continue to lower that corn export number over the next couple of months. And when we look at that comparison, we have seen Mexico be more aggressive in buying, but we're seeing right now some cutbacks, especially in China, a little bit in Japan, and we're seeing some cutbacks across Central America. And so we are struggling to find some additional sales right now when it comes to the international marketplace. And that's not a struggle just for corn and soybeans. We're seeing that with a lot of our agricultural products right now because U.S. prices have been strong relative to the rest of the world. Now, in looking at feed demand, as I mentioned, USDA took feed and residual down 25 million bushels, but I don't think that's because they expect a drop in feed demand. In fact, if anything, the update on the meat side for this month pointed to a little bit of a gain, if you will, compared to where we thought we were in July. We're seeing a few more pounds of beef being projected for 2024. That bodes well for feed demand as we're looking forward. It means that we're not seeing as big a slide on the beef production side as we first originally thought. On the other hand, though, we are seeing the broilers, while still growing, pulling back a bit, at least on their growth side there. And so I think feed demand is stable. I think what we saw USDA react to was the smaller crop, meaning smaller, what they call residual usage, which is mainly harvest loss when we think about it. Now, the one area that they didn't touch was ethanol as we looked forward, for, not only finishing out 2022 marketing year, but looking forward for the 2023 marketing year. They held steady there, and I think it's because what we have seen, especially this summer, is fairly strong corn demand through ethanol. We've been holding up there in that 105 to 110 million bushel range each week. Demand for transportation fuels has been very strong, and it continues to hold this industry up. The challenge, though, is that we don't see a lot of additional growth here. As you can see, that range from 105 to 110 is nearly at the top of the range that we've experienced historically here for ethanol. And so holding that level is actually a pretty good spot to be in. So when we put this all together, the idea is that what we've seen is both supply and demand shrink a bit, but I think it was those demand cuts that sort of kept the market, if you will, feeling a little more negative, despite the drop in yield here, which normally would lead to higher prices. We saw prices actually retreat a bit, and I think it's because of the export cuts as we look out there. Now, as prices finished out the week here for, the report week in August, we found that as you're looking at, nearby December corn futures, they're floating in that 485 range. So we've fallen below 5. We've been sort of bouncing back in and out below and above $5 for the past few weeks. Right now, it looks like we're going to stay a little bit below for a little bit. But as you can see here, we're building some carry into the market. As we look deeper into the marketing year, we do see prices going back up slightly above $5. And then the market is signaling for the 2024 crop a little bit higher price there, looking to get us back closer to $5. And when you think about why $5 is sort of the target for the market, it's because I think the market is getting itself back in balance. The last couple of years, we've had some very strong profit margins for crops. $5 is a production cost estimate for 2023. And so this is saying that, corn's around break even right now and is looking to stay there as we look out over the next 18 to 24 months. So on the soybean side, we still see some strength, especially finishing out old crop for 2022. So that's where we still have soybean futures up there around $14. But as we look into this harvest, we're getting down there around $13, holding fairly flat there throughout most of the 2023 marketing year, then taking another step down as we look towards 2024. And it's stepping down back again towards our production cost estimates. For 2023, we estimated soybean production costs at $12 a bushel. And so the market is slowly working its way there. I think we're seeing a bit more strength on the soybean side versus corn, especially as we look at the 2023 crops, because of the export push we've seen over the past couple of weeks from soybeans. And we haven't seen the same sort of run in from the corn market. Well, I think that's going to be the challenge here as we're looking forward. Looking in the next month, as we look towards September, USDA will not only bring in the farmer survey on yields, but they'll also look at what they call their objective yield survey, where they actually go out into the fields, measure those ears, maybe even gather some and bring them into the lab to estimate yields. So we'll get more refined estimates on the yield side. But we'll also be watching to see if we're going to get some additional signals on what's going to happen in terms of usage and demand. And one of the big ones I'll be watching here will be those advanced export sales, because I think they hold the key to where we're going to end up with 2023 pricing. As it currently stands, with us being a little bit below average and seeing some weakness there, that means we're likely going to hold these prices in and around $5 for corn, around $12 for beans, which is, like I say, it's roughly break even as we're looking out there. So a different picture than what we've seen over the last couple of years. Well, that's an update for what we're seeing here in August. We'll provide another update again here once we get the September reports out. And like I say, that'll be interesting because of that objective yield survey data as we look out there. But with that, I'll stop. Thank you for your time. My name is Chad Hart. I'm an extension economist of Iowa State University. Thank you for the pleasure of watching this video and joining us with us. And I hope you have a healthy, happy, and profitable end of 2023.